Alright, what's up traders? I got a request for a specific TA video there in the comments. I'll link the guy's name here whenever I find him later on. We're going to be checking out how to recognize fake out breakouts, how to actually see if it's just going to be a sweeping of the stops, catch people off guard, and then go back in the opposite direction. Now this is something that you're actually going to be able to use to enter positions. I'm going to show you a few different ways that we can use this and to exit already active positions, so that you can know when to take your profits, when to get out of the trade, when it's safe to actually do so, and it won't actually continue in the right direction. Now this is going to be a little bit different than most people, that they kind of make a crappy fake out breakout. How do you know when it's going to break out? And they don't actually give you anything very practical. I've actually thought of a couple different ways and different patterns that you'd be able to recognize in the chart, and then I'm going to show you different ways that we're actually going to be able to trade that. So listen tight, and make sure that you got your hats on or something. I don't know, because they're going to be blown off. Alright, so listen carefully. I'm going to give you three things that you can actually do here. The first is going to be something very similar to a previous video that I made that I'm actually going to link up above here in a card. You go ahead and watch that later. Leave this video running so that I can get that watch time. I'd really appreciate that. And this is basically going to be when we see one candle breaking out and then closing back within the range. It's going to be very simple to spot, and you're going to know that that was simply just a sweep, most likely. The next one's a little bit harder. We're going to add a little bit more depth to it. It's going to be multi-candle breakouts that are then going to reverse back into the range, and we're going to look at the lower time frame. We're going to figure out how to actually capitalize on this. And the third is actually going to be an actual breakout, but we can use the retracement back to the range borders, and then we can take a trade that way and possibly even deeper back into the trade, depending on what happens at that range border. Alright guys, this is super simple. So you're going to be able to see these absolutely everywhere, especially let's look at EU right now. Fake out breakout right here. This is the swing high, a sweep above, and then we close back within the range. That's going to be a really strong indication that you can get short there, and you would actually want to exit any trades if something like that did happen on a major swing high level. Of course, this is a little bit higher time frame, and that's not much of a dip. What's going to be even more powerful is when you dip down low in between the ranges. This is still kind of going up, and it's not super strong. Something more like this, where we see this is the previous high, we really dip down, we create some retracement, and then we come back up and retest it. This is going to be a much more powerful sign, and we closed right back within the range. So make sure that you look for those ranging, really big dipping before we actually test that again, because if it just goes up in an uptrend and it kind of comes down a little bit, something like this, right, where that's the high and it closes below that, then it's not a very strong sign that we're going to actually break back down to the downside. Now the next one is when we see a multi time frame, and I'm actually just switched to hourly here just to kind of show an example, and you see one right here, right? So you see that this is the swing low, right? And then we've closed actually down below, and a lot of people would say, great, we closed down below, now it's time to short the market, look for shorts, something like that. But no, the next candle, quite clearly, it comes right back in. So how do we actually recognize that this is going to come back in before we wait for this massive engulfing candle? Because then it's way too late, and if we're already in a trade, this is going to be so detrimental. If we were already in a short from up here, and we saw this and it broke all the way back down there, you're going to lose half of your position. So how do we know when we get out? You see something like this at the swing lows, and then you're watching the lower time frame. This is the 5 minute right here. On the lower time frame down here, you see we're kind of just consolidating after. There's not a whole lot of conviction, and what's really important is that we actually break the level that brought us down to the low. So this is the level that's bringing us to the low, and then it's breaking back up with conviction. So you would actually be able to exit the trade entirely on this candle close right there. So it's much better than waiting for it to come all the way back up here. To give you another example, guys, we have a trade that I actually did take today. You see it closing right above there, right? This is EU once again, same thing, 60 minute. and we see the swing high, we see it close above, only barely, but it doesn't really matter. It doesn't really matter because that was actually a close above, and that's quite promising for the bulls. But as you see on the lower time frame, once again, you see it kind of just start to pull back right away. This is the level that brought us to the high, and then we started breaking back down. So what I actually did was, I wasn't in a trade at all, but if you were in a long here, that would have been a perfect time, because maybe you longed down here after you saw this sweep and this breakup, right? And you were targeting something higher, but then you saw that it reversed like this. I would have taken everything off the table at that point, right? And this was actually a long that I was trying to get in on, and I just barely missed it. I was trying to long from down here, and I would have actually exited. But we took a short here, and it was a little bit tight of a short. So I'll show you on this breakdown, that's where I entered short, and the stop was super close, because luckily we're trading EU and we can have super stop close, super tight stops, right? And it came pretty close, and then we were just targeting the closest, basically, resistance within that same range, because this was the most likely place for it to continue back up to the upside. And you know, some people got lucky and they continued the trade, and it kept going in their favor. So that's the next thing. Make sure that you watch for these breakdowns around the same level. Alright, so finally, I did say, what if it actually does break down with conviction? Again, this is EU. EU is absolutely incredible lately for this type of trading, because it's just non-stop, basically what we're seeing here. These fake out breakouts, and you're going to be able to really capitalize on them probably in the next couple weeks if you do apply this properly. So you really see it's in a downtrend. It's breaking out from this previous swing low, quite obviously, right? A little bit of wicks here, whatever, that's not important. Let's kind of ignore those, but this was the breakdown. So what happens when we look at the lower time frame? After a breakdown, it's always going to reverse at some point, and we need to watch to see how these candles are forming. So you'll see that we have two large white candles, right? And then we start to kind of slow down. This was our level that brought us to low right there, right? So now that we see that the trend is actually breaking back up here, we can actually look for a long in this position. Now this might not be the perfect example because your risk reward isn't that great, but your first target in something like this, after you see a strong conviction breakout like that where the support has now turned resistance, your first target would be that same breakout zone. And then if you are feeling up to it, depending on how the market conditions are going, and if you're actually bullish on this pair, you might be able to target a little bit higher, maybe up here, these untested levels, things like that. But of course, something like this with strong conviction, you really need to watch to see how it reacts on that level that it broke down. And in this case, it reacted with just a major engulfing candle. So you probably could have left that running because you didn't actually see it break back down to the downside. If it had broken here and closed back below, then it would have been really wise to just completely exit that trade for a half our profit, right? About half of what you risked. So for you guys that actually watched to the end here, I got a little bit of a bonus there for you that you can make your trades even more probable of being right. So we need to watch the trend, and this is the reason why I actually wanted to enter this trade, and I was so much more confident in this trade. So it is a downtrend on the hourly, right? And we see that again, this was the sweep high, this was the pair that the trade that we just talked about, right? And if we go over here, you can see that we're now returning to the major trend, basically. And if we were fighting the trend, something like this, right? That first pair that we looked at, I didn't enter right away. I looked for the retrace and the acting as support, because when I'm against trend, I really just want to make sure that this area would act as support. And that's why I actually missed that first trade, because I was waiting for it to react off of this level and then confirm that that's support, and then we can actually go up. So to reiterate that, just so it's very clear, if it's in the trend, you can basically just enter after you see the sweep and then the breakdown of the level. If it's counter trend, what we want to do, see the sweep, break of the level, and then form a support base on that level and then continue back up. So you got to be a little bit more passive when it's counter trend, especially in these very hectic market conditions. I hope that helps, guys. Make sure that you hit the subscribe and the like button, and I'll see you guys next time.
Listen.